What's up YouTube? Crypto Muse here with your daily episode. Today's video is going to be pretty brief. Just wanted to talk about some really quick points, what's going on in the market today. And I've had a couple of people ask me basically, well, how do we hedge against this? And hedging basically means insurance, right? So in case it does go down and we're holding long positions, how do we kind of soften that blow? So really quickly before we begin, obviously the market, it's not our best day, and I think there's a couple reasons for that. Japan, first of all, announced that it would take action against cryptocurrency exchanges that don't comply with the Financial Service Agency customer protection, and it's been said that a couple of exchanges may temporarily shut down to fall in regulation to make sure that they are compliant. Next, the SEC just released a statement basically reinforcing what it said in February, that regarding potentially unlawful online digital currency trading platforms, since it's become a really common place to trade those ICO tokens, to just make sure that those exchanges are registered with the SEC. Right, the SEC is basically worried about that the consumers, the investors, the retail investors mistakenly believe that the exchanges that we're trading on are compliant when they are not. Another thing that we found out within the past couple of days is that within the last 2 months, the trustee of Mt. Gox has sold off about $400 million worth of Bitcoin, and some are pointing towards those sell-offs as the reason why we saw Bitcoin crash in January and potentially could be even crashing further. And I think the biggest piece of news today is Binance was arguably hacked. It's of high controversy as of now. Some people are saying that there's an API, and the API basically grants, it's like a bridgeway from one application to another application, and you can grant that API certain privileges to execute certain trades for you, to pull pieces of information. And one side of the story is that the third-party trading bot, which had an API connection to Binance, was hacked. And some are saying that Binance has a vulnerability within their API, because there is an option when you are connecting an API that says, do we want to allow this trade or do we want to not allow this API to trade? And so we'll know a little bit more. Some people are saying that they were hacked even though they had an API connection, but that API connection, they had checked the box that said, do not enable trading. So within the next couple of days, I think we're going to get a better picture. But of course, if it is the latter and there was a vulnerability in the API, I'd recommend anyone who currently has an API connection set up to disable it until we get a better understanding of what's going on. And moving on to really the point of this video today, which is I believe that the market, we will see a retest of 6,000, and with all the news, with all the government regulations coming in from all sides, even though there's positive news, I think naturally the government is going to come in, right? There's a lot of people being scammed today, a lot of people who don't know any better, and this is why people argue that we need regulation. And although it'll hurt us in the short term, I think in the long term, it could provide to be beneficial. So there's a couple of reasons, and I've been doing research all of last night and this morning to kind of decide, or I guess use my opinion on where the market is going. And there's a couple of different people that I follow online, and the majority of them do feel like we are going down. And kind of doing my own research and analysis, I would also say the same. One of the things that we did not see when the market initially hit 6,000 was a double bottom, right? Typically, we like to kind of see that it's retested that bottom and it bounced off of it nicely. So I was kind of looking at charts from 2014 and in 2018, and you can almost see that they are almost identical. I'll post in the notes. This is from TradingView, and it's someone I follow, and I think he's made a lot of right calls in the past. But you can basically see this is 2018 and this is 2014. They look very similar, where we've had a peak and then a retest which failed, causing a subsequent drop with a strong rebound. And I'd say the only difference that I've seen with these so far is that you can see that we're still kind of retesting there. the double top right there. But what we can see happen after is this retest failed and we came down a decent amount. I think if we come down the same amount, we're looking at prices of around $4,000 to $5,000 in terms of Bitcoin. So although I'm going to hold the majority of my position, I think it's easier to hold at the end of the day. You don't realize your losses until you sell. I am taking a hedge out and going to take a small position and short Bitcoin. So I've had a couple of people ask me, how do you do that? So I thought it'd just be easier to record it and do it live for you guys. So really, before we dive into the platform and I'll show you how to do it, there's a couple different ways. There's BitMEX, there's Bitcoin futures. What I'm leveraging is, or what I'm using is Bitfinex. And I thought it might help to walk through just what exactly shorting means, what exactly margin means, and give you a brief tutorial. Again, as a disclaimer, this isn't financial advice. This is simply what I'm doing, and I'm just sharing this information out there if anyone else is interested in doing it. I'd also say you should do your own research in terms of really understanding what shorting means. There's a lot of traders who will only trade the upside, and then when they feel like the market's going down, they just cash out, which is another option you may want to consider. And the reason for that is that typically when in the long term, things typically go up. And to get caught on the wrong side of a short, when you're long a position, let's say you buy a stock for $100, the maximum amount of money you can lose is $100, because that coin could go to zero and you're left with nothing. But when you short a coin that's at $100, what you're doing is you are selling it first and then you're buying it back later. But what if that coin went to $1,000? What about $10,000? You could be looking at an infinite amount of loss. So you really want to be sure of what you're doing and have strict rules, stop losses set in place, and understand when you are going to get out and cash out of your shorts. So I'll walk you through just a quick example of how this would work, because on Bitfinex they give you 3.3 times leverage, which basically means that whatever money you invest, so if I invest $100, right, that means I have $330 to trade with. So let's say I short a coin that's currently priced at $1. If I use 3.3 times leverage, I can have 330 coins, right? And of course, there's something called a margin call, because this is how they basically protect themselves in case the market, depending on what side you're on, if it goes one way or another in an extremely sharp fashion, this is how they protect themselves. So you always need a 15% required equity with Bitfinex. And in our example, 15% of $330 is about $50. So I want to walk through two scenarios with you, and keep in mind we are, in both examples, we are shorting a coin. So in the first scenario, we bought 330 coins when it was at $1. Let's say this coin went down to 1 cent, right? Then that means that our profit would be 330 minus $3.30, because we still have to buy the coins back, but we're buying them at 1 cent. And that means that our total profit, if we maxed out our leverage, would be $326. If we decided to do the same exact trade, but without leverage, meaning we bought 100 coins, then our profit would be 99. So you can see the power of leverage. By using that, we're able to more than double our potential earnings. But now I want you to consider the flip side of it. Let's say we buy that coin and it goes up to $1.15. Because of that leverage that we took on, when that coin is at $1.15, you are down $379, right? And you sold the coin for $330. So right now you are at about a negative $50 loss. And at this point, you would get a margin call, which is basically Bitfinex saying, hey, we need you to deposit more money into your account. If you do not, then we will be liquidating your position and you will be stuck at that. And the danger of that is, what if it hit 115 momentarily and then the next day or the next week or so, it proceeded to go down to 1 cent? Because it's almost impossible to pinpoint the peaks and the bottoms of any trade, right? And you want to leave yourself a margin of error. So although they give you this leverage, and the lesson I'm trying to say is that they give it to you, but unless you feel extremely confident about it, I would think twice about using all of that leverage. All right, now let's dive straight into the platform. All right, so I created a test account just to kind of show you guys how Bitfinex works and to show you basically how we would execute a trade like this. So Bitfinex offers you 3 wallets: a funding wallet, an exchange wallet, and a margin wallet. What we would have to do is first we would have to sell ETH into USD and then from USD into Bitcoin. Before we do that, actually, what we'd have to do is we would have to transfer. Right now it's in our funding wallet, so we would have to transfer Ethereum into our exchange wallet. So go ahead and do that transfer. Now we can come back and we can sell this, and once that gets sold, what we'll do is go up to trading Bitcoin for USD, and we'll see that it's been executed. So the trade's been executed, and now what we can do is you can see that I've already purchased a small amount. I did a little test prior to showing you guys, but what we would do is now we would go back into our USD wallet right here, and we would have to switch the funds from exchange to margin, hit the button transfer, and once it's transferred, now we can short it once again. So in order to short it, you would hit margin, you would hit how much you want to potentially sell, and you can see that although I have $2,226, again, they give you 3.3 times leverage, so you're able to trade it at $6,500 right now. I'm not going to do that because I don't want to get a margin call, and so I'm simply just going to put in an example amount, and I do it at the market right here, and boom, it increased from 0.1 to 0.2, and I now have an open margin, short margin position on Bitcoin. I hope that video helps, guys. If there are any questions you have, it's super simple, but again, do take the time to do your own research on the implications of shorting a security, shorting a currency. It's not financial advice. It's just me trying to help you guys in case you guys had any questions on how to actually execute the trade on Bitfinex. Make sure, if this helped you, make sure you hit that like button as well as that subscribe button. Check out my other videos for my top picks, and until then, I'll see you guys next time.